Folks, this live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa, offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
That is such a decent
That's a pretty cool beat.
I'm just like bopping my head away. What's up, guys? Welcome back to the Trading Up live stream. You are joined here today by myself, Rodrigo Antonio, and my business partner and the master technician, Diego Torres. We are the bank level traders, and we're here to trade with you, make money with you. And we're here to show you guys how we trade using smart money concepts and pattern filtering. Well, we just use patterns, man, to like find the best order blocks, and they are so accurate. And so we're going to show you guys how we combine smart money concepts, Elliott wave, and the patterns that we use in order to get high probability trades, high win rate, high risk to reward. So if you are currently struggling as a funded trader, perhaps you don't have a strategy right now, then you make sure you listen up, make sure you're taking notes, make sure you're learning, because we are professional 7-figure funded traders. And so we are here to basically help you guys, teach you guys, guide you, coach you, because it's what we do, is what we love. So Diego, how you doing, man? Where you at? Okay, Diego's gone AWOL. Let's check the comments.
Amazing. Yes, I'm a little bit slow today, a bit foggy. Haven't done my full routine. This is why routine is very, very important. I'm in the UK.
I'm in the UK. Yeah, you do sound a little bit slow today. That's cool. That was me last week. I had the worst illness possible. I had the man flu, guys. The man flu. You all know what the man flu is. Yeah, can hear you. Can hear you okay. So yeah, last 2 weeks I've had the man flu. This week I'm about 60%,
okay,
70%.
Yeah. The man flu is weird.
Yeah.
When internet's a bit weird today. The connection's a bit poor.
Oh, am I lagging, or is it you? I think we might be lagging here, guys. Do apologize. Just type in a 1 in the chat if you can hear me okay and you can see me okay.
I have no idea who it is, but you're like 5 seconds slow and you're moving in slow motion.
All right, so it sounds like everyone can hear me and see me okay. So maybe Diego, try to log out and log back in. Let's see if that works. So in the meantime, whilst we fix these technical issues, let's check in with you guys. Yeah, let's check in with everybody. Who is currently a funded trader? Who's currently funded? Type a 2 in the chat. Okay, and type a 3 in the chat If you've tried funded trading, but you've failed a few times, maybe once, maybe two, maybe three times, just type a 3 in the chat if you've tried to be a funded trader. Okay, so we've got Ali. He's a funded trader. Sandman also funded. And we got a couple of 3s here. So traders who have previously been funded and lost the account for whatever reason. Drew, all right, guys. So we got a little mixture of everybody here. This is great, because then the content that we want to go through with you guys, the stuff we want to go through is relevant to those who are interested in funded trading. And funded trading is literally the best opportunity right now as a trader, because you get to manage 6-7 figures using none of your own money. It's a prop firm's money. It's someone else's money, and this is great because this obviously means low risk for us. But the problem is if you don't have a strong strategy, if you don't have a solid strategy that gives you consistent returns, that's number one. Number two is you don't have the trader mindset. If you don't have the mindset in order to execute consistently with discipline, then you're not going to make it. So, you know, this is the thing. You got to have these two things. You got to have the strategy and you got to have the mindset, right? And this should be the focus. So today we're going to cover both things, right? We're going to reveal to you guys a bit about the bank level trading strategy. We're going to just show you a snippet, little snippet of what we do, how we do it, and why we do it, right? So hope you guys are focused, because we are professional traders. We are serious about what we do. We enjoy what we do. We're passionate about helping you guys. And so let's get into it. Let's see if Diego's managed to sort himself out. Let's see if we can have a look at his chart.
You go for it. You should be able to check it out. There we go. Do you want to cover it, Rod?
Yeah. Okay. So let's get into some of the indices a little bit, because the indices are really important, guys. Yeah, it's really important to understand what's going on in the entire market, right? So I like to see where the money is flowing, because as a funded trader, you need to understand where the institutional money is flowing, and the price action, the language of price action, is going to tell you exactly that. And so you need to understand price action. You don't need to be a master at price action. You just need to understand it, the language. Yeah. So in order to understand what we're looking at right now, let's go into the Nasdaq. Yeah, this is the top tech companies in the US. So this is I love trading the Nasdaq. Let me know, typing NAS, if you trade the Nasdaq. Personally, I love to trade the Nasdaq. The moves are fast. The accuracy, when you know how to trade, is just sharp, and you could be in and out. So Nasdaq is great for day trading. So what we're looking at, the way I like to trade the Nasdaq is I want to understand what the banks are thinking. Those guys on Wall Street, I want to know what they're thinking, what they're planning. And I understand that those guys, they use the higher time frames. They're looking at the market structure. They're looking at many things. But what we all look at is price action. So what we're seeing right now is we've seen quite an extended downtrend on the Nasdaq, and we all know it's because of the sentiment out there. We know that the Federal Reserve has been hiking, and that has been putting a lot of pressure on risk assets, and so the Nasdaq has obviously tanked. It's been overextended lower, and so now we're getting a bit of what's called a bear market rally. Write that down, guys. Bear market rally. So during a bear market rally, there's opportunity. Okay, there's opportunity, and so there's opportunity to take advantage of the move to the upside, but there's also opportunity for the continuation lower. So as bank level traders, we use Elliott wave, and the structure, the higher time frame structure that you're looking at, what we're seeing is a 5-wave structure. It's a very large structure here, and so that 5-wave structure has now completed, and price is now correcting itself. Okay, it's correcting itself, and it looks like it's either going to turn into a 3-wave correction, then continuation lower, or it's going to turn into a 5-wave correction. Either way, as you can see on the yellow pattern, we have 1, 2, 3, 4 waves so far, right? And this is an ascending pattern. This is a corrective pattern, okay? So what we're anticipating is further upside. We're anticipating a little bit more of the bulls to take price a little bit higher. So this is the daily time frame, guys. We're not trading the daily. We're just going through higher time frame market structure. Okay, this is a very important step in the bank level trading strategy. We use a higher time frame. This is multi time frame analysis. So for you guys, to understand the multi time frame analysis, we're showing you guys. So there's a question here from Ish. Banks trade with Elliott. Some do. Some bank trade. They have algorithms that use Elliott wave. Some traders do use it. But Elliott wave is not about whether banks use it or not. Elliott wave is actually based on human behavior. Yeah, Elliott wave it goes deep. I don't like explaining Elliott wave right now, is out of the scope of this live stream. But to answer your question, yes, some do. Some do. Some technicians will use it. They will have systems using it. To answer that question very quickly.
Yeah.
So
essentially, we use Elliott waves and patterns to filter out where the banks are actually getting involved. You see, so we're using multiple confluences because we can't just be trading every single order block or banker block, such as here, over here, inside of the middle of the pattern, of the lower time frame. There's so many order blocks, but we're using the patterns and Elliott waves. You're going to know exactly when to use these banker blocks that the banks use. So that's the trick with the BLT, just to answer the question as well.
Yeah. So these tactics that we're using are basically to increase the probability of our points of interest, because there are hundreds of points of interest, and the lower time frames you go to, even more points of interest. There's loads of order blocks everywhere. There's a lot of imbalances. Okay, so those of you who are familiar with smart money concepts, ICT concepts, right? It's hard. It's not an easy strategy, right? Otherwise, there'll be a lot of millionaires out there.
No, I think
So we're
smart
trying to
money
break it.
concept it's the new retail, I think. Like everyone's
Yeah,
jumping on it. So you need to have an edge with it. It's the new retail these days. Let's admit it.
yeah. Smart money concepts on its own, you're gonna lose money. You're gonna get stopped out constantly, right? So it sounds sexy, it looks sexy, but look, it's a lot. It used to work really well, but it's too common now. Yeah. So we're teaching you guys a more advanced approach to it, so that you don't get caught out. Yeah. So Diego, what if you go into the H4 time frame? What can you see with this structure?
Yeah, hold on.
Oh my, we're getting hacked.
Yeah, blocked it. Falusi chart is too dark. It looks good on my side. But maybe you could put the brightness up.
You just gotta zoom in to the price action a little bit. So go on the H4 and then tell us what you see on the Nasdaq, because I'm seeing a bullish opportunity here on the short term.
Yeah, 100% bullish towards here, without a question of a doubt, to be honest. But in terms of when it's going to go there, I can't say that. We need to wait for confirmation. So a few scenarios could be that price might decide to obviously take at these equal lows, as you can see. And then it may be a stop hunt towards 1, 2, and 3, and the imbalance here, as you can see, and then a rally to the upside. That's obviously a scenario. That's why you need to have that probabilistic mindset. This imbalance is too big, so we'll need to investigate on the lower time frames what is in confluence within this point of interest, right? So we could go one step further and go to the H1 and redefine this area, and there we go. We've got a nice imbalance right here, as you can see. For those of you who don't know, I can just zoom in. This is our imbalance. Look at that imbalance. Lots of momentum, unfilled liquidity. So that's very, very likely going to get hit. So if we were to extend it now, that's a good little confluence. You see that? And this wasn't by coincidence or by magic. It's the confluences. It's waiting for that confirmation. So that's one scenario, which is looking.
Yeah. So what I wanna just add to this. Yeah, I'm gonna give you guys a really, really powerful tip. Yeah. So write this down, guys. Yeah. Someone write it down in the chat. The banks are looking for liquidity. Yeah. They have big orders. They already know where they want price to go. But in order for them to get their buy orders filled, they need sell orders. They need the opposing orders. So if there's not enough liquidity for them where price is currently, what are they going to do? They're going to do what Diego is describing. They're going to seek and destroy. They're going to take out those equal lows.
Exactly.
Those who trade ICT, that's a turtle suit. You know, that's a turtle suit right there. So there's a reason why these concepts exist, because they're factual. They're based on the fact that banks are looking for liquidity. They need liquidity, so they'll hunt for liquidity. And liquidity is basically your stop losses, guys. That's your stop losses. So if you're constantly getting stopped out, that's the banks. They're chasing your stops. They know where they are.
Yeah.
So
I can give an example of what Rod is explaining. So if we were to look at this on that M15, right? And then we sort of see, let me see. There's a potential trade here. Looks like a head and shoulder, or maybe even a potential. There's so many scenarios as well. Look, this could be a potential double top, or from this double top, right? So already there's two different types of strategies: head and shoulder or the double top. Whether you put your stop loss here or here, or even if you look to the left and you want to be extra conservative and you want to put your stop loss above that, this little significant high, right? Or even you want to be extra conservative. I think, you know what, I've got this. Let me put my stop loss above this structure. Then I'm going to be extra safe. And then you've got your target of this area. right? So those are the sellers. But then what about the buyers? There's going to be buyers around here, right? They're going to be looking to buy that market because it's a previous support, right? And they'll be targeting the highs. But guess what? This is not where the liquidity is at. This is pure retail. If we zoom out and we actually analyze what's happening, look how the buyers have been struggling. They're struggling. This is not momentum. There is no volume here. You look to the left, look at this volume. Look at that volume. That's where the liquidity is at. This is just a bunch of, it's struggled. It's not, there's no liquidity here at all. Whereas if you look here now, look at the liquidity, look at that momentum and what caused it. There's actually a banker block here, right? And guess what? The sellers, they're going to get stopped out. All of them, all the examples I just gave you, they're about to get stopped out very, very soon. So then sellers will get stopped out. These buyers here with no liquidity, thinking that's a good support, they're going to get stopped out towards liquidity where there was previous volume. So if you don't understand the basics of where liquidity is at, that simply shows that you are part of this liquidity. You are the liquidity, fellas. It's as simple as that.
Yeah. So, yeah, I think Ali Green Barrett describes something very important here, like compression. Yeah, compression is a very, very powerful indicator. Very, very powerful indicator, and we use compression to indicate to us when the banks are starting to engineer. They're engineering a setup. They're engineering price so that then their orders can be filled. They're big orders, so they'll dump on price just to engineer it lower. They'll wait, and so when you see compression, you see candles getting smaller and smaller, but they're still sort of like going lower and lower and lower until they start getting filled. When they start getting filled, and they've absorbed all of the supply, right? So there's only demand left. When there's only demand left, boom, you see a pop.
Exactly that. And there's a few scenarios. There's potential sells from this imbalance, or it could even come up here, but we still need to wait for some confirmation. You don't just take it blindly, right? So my forecast at the moment is looking at shorts towards this area, but the long-term sort of target would be longs. But this is for now. I mean, this could easily change and it could drop. To be honest, this is looking like a good short. Unless we get clear momentum and we take out these highs, right, then fine. It's an invalid banker block. Right, there is liquidity here. Look, there is equal highs, as you can see. Then unless we take that out with momentum, then that's a confirmation that we're on our way up to minimum this area. So if we do get that momentum, what do you think I'm going to be looking out for? I'm going to be looking out for this, a pattern, some compression, and then I can get involved to minimum this previous structure. But the long-term targets will be all the way up here towards where? Look at his momentum, previous liquidity, again, previous liquidity, multiple confluences here. So once you're literally playing ping pong with you guys, once they finish playing that funny game, which we like to do with the BOT, right, then we'll get involved. We'll be selling it here, we'll be buying it, potentially selling it here if there's some momentum here on the lower time frames, then we can buy it again. And then again, we'll look for a boomerang, look for a scoop, and then we can catch the big short all the way down to the larger liquidity. But in the meantime, we're just taking whatever's in front of us, which is potential shorts towards this area. But it's a short-term trade. So
see, looks at some of our bank level traders. We've got Lawrence from the UK. He's looking for shorts to longs on the S&P 500. So S&P 500, Nasdaq, very correlated. I personally use S&T divergence. So this is an ICT concept when I'm trading the Nasdaq, S&P 500, and the Dow. And I'm also looking for the opening range So I look for that. So these are ICT concepts that I personally use when I'm trading indices, but I'm also using the BLT to filter out the most high probability order blocks that I'm using it to look for where the potential higher time frame reversals are, where the compression is. So it's the BLT basically simplifies ICT, simplifies SMC. And look, I mean, the chart that you're seeing right now is using patterns. It's very simple. We don't have indicators. We're just using pure price action. And it's very, very accurate. Very accurate. So let's keep going. Yeah, we got BlackRock in the house saying compressions on key zones, very powerful. Yeah, you've seen it. We've seen it. It's there, guys. It's there. We just have to open our eyes properly. We have to look at. We need to stop, guys. Let me interject here. Yeah, we got to stop looking at the charts, and we got to stop trading for our desires. You got to stop trading your expectations of your dream life, right? You got to stop like trading because you want to achieve something. You want to quit your job. You want to buy your mama house. You want to take your girlfriend on holiday. You want to go to nice restaurants. You want a nice car. You need to get this stuff out of your head when you're trading, okay? Because when you're trading, if you're thinking about these things, or you're thinking about your previous losses, you're thinking about how much money you just lost, and you're just in this emotional spiral, negative. You're in this negative scarcity state. Like you want, you need, I want, I need, I want, I need. If you're in this mindset when you're trading, you're going to start trading what you think, not what you're actually seeing. Okay, write that down. Stop trading what you think, trade what you see. Yeah, open your eyes properly, like really have clarity of mind, clear your mind, clean your charts, delete everything on your charts every day, fresh charts, and just trade what's in front of you. Okay, learn the language of price action, my friends. Learn that language. So yeah, let's go back to the charts. And yeah, and then Lambo. Yeah, once you've done that, once you've done that, then Lambo. Yeah, because like that's when you're consistent and you're applying your strategy consistently and you're getting returns, then outside of the charts, outside of trading, when you start withdrawing and it lands in your account, then you go spend your money, then you go do that. The excitement happens outside of the charts. If you're getting excited about hitting 3, 5, 10 hour, if you're getting excited about your P&L, you're doing it wrong. You're in here again. You're thinking about your desires. You're thinking about, wow, I'm smashing it. If I do this, if I take trades like this for the next 6 months, I'm gonna have the Lambo, or I'm gonna go on holiday. I'm gonna have this. I'm gonna quit my job. I'm gonna move out my parents' house. Stop it. Stop that shit. Yeah. Don't like these wins. One trade does not define you as a trader. Write that down. One trade does not define me as a trader. It's a series of trades. We're talking every quarter, like 3 months. You got to review yourself every 3 months. Yeah, you got to be. That's how you got to think. You got to think big. You got to think in 3 months, I need to still be funded. In 3 months, I need to still be in the game. So in this trade right now, is this trade gonna help me survive? What does that mean? It means you need to be using good risk management. If you're not using good risk management and you're just over leveraging, you're chasing, you're revenging, you're on tilt. If your risk management is all over the place, then you're doing it wrong, guys. All right. Thank you. So stop trading what you think, trade what you see. Yeah. Pure understands. He understands it's facts, guys. It's facts. So
Yeah.
let's go back to the charts now.
Pure facts. Okay, so that's the NAS 100 expecting shorts and then expecting longs. It's quite self-explanatory. It's very, very, very obvious. That's the game plan. Whether it comes to this imbalance or maybe an imbalance on the lower time frame, we still wait for confirmation, but this is the game plan. In fact, I'm going to save this here for next time to show you guys the before and after. Let's see what happens. Trading up. Cool. I don't have much time, so I've got 15 minutes left. So let me just cover the rest. I do have a question from one of the build team members, which is, how do I use correlation? Right, so we can cover that in a minute. The S&P, again, similar story to the Nasdaq. As you can see, same principles happening. We've got the compression, drop, compression, drop, compression, drop, compression, drop. But before that, expecting one little rally towards previous liquidity and then a drop to the downside to complete this sort of third tap. Anything you want to go over, Rod?
Right. So S&P 500 very quickly. We're looking at the H4, and we're seeing prices taking out sell side liquidity from the previous day. So for me, I need to see price action on the 5 minute in order to find my trade. So between the first hour, so it will be 9:30 to 10:30. So it'll be the New York Open, basically the first sort of hour of the New York Open. Yeah, I need to see that price action on the 5 minute. Once I've established what that is, then I'll be able to make a more accurate decision. But right now, from what I'm seeing, sell side liquidity has been taken out. There's nice there's nice accumulation. There's a nice pop. There's a nice break of structure to the upside. So higher time frame is bullish. 15 minute right now is bullish. So overall, I'm bullish. So I want to see some sort of want to see price dip just a little bit, hit that banker block for a nice boomerang, and then I'll be interested in taking longs. But it's very important for me to see that first hour of the New York Open. So yeah, that's my take on S&P.
Cool. Thank you, Rod. Okay, US 30. Zoom up. Yeah, similar story, to be honest. Everything's pointing up.
I think, yeah, there's no need to cover US 30 because we've pretty much covered both indices. Let's jump into Dixie, Euro, Aussie. Let's have a look at what you're seeing.
Yeah. Okay, so the Dixie, obviously dollar. This is the game plan. I mean, I posted this quite recent within the community, but let's look at the actual price action, see what's happened. So this pattern here, that's been completed. I was targeting the equal lows. They got filled, but then it dropped even lower. But what's important is the correlation, which is one of the questions from the members. If we zoom into the M15, some clearer price action, we can see that although it triggered the liquidity pool and the equal lows, right? So that's telling us that it's potentially going to go long, right? But I wasn't too convinced it was going to go long, right? And the reason for that was because of the price action. It was a pattern. You know, it rejected of it first. Okay, fine. It rejected of it first, but the price action, what was it telling me? Look at the large wicks. You know, the buyers are just not having it. The sellers are still in control. Normally what you want to see is you want to see something like this, for example, this, but on the flip side, right? We never had that. Kind of just had momentum, and then it reversed from the point of interest. Let me zoom in for you guys because I know it might not be too clear. We had bearish momentum, as you can see, and then we had a rejection of the liquidity pool, but with large wicks. So the buyers tried to go, and they tried to go along, but the sellers were just not having it until boom, bearish engulfing came, and then another new low, and then it pulled back and formed some compression and formed a pattern. So this is indicating that these equal lows, it wasn't really a bullish setup. There's too many bearish confluences. So if you look at Thursday with this beautiful large pattern, it then dropped even further to the downside. So already liquidity here, this imbalance that I took from the H1 somewhere to the left, they got filled, right? So they've been filled, but normally what you want to see is a strong rejection. We never got that. It just for liquidity, and that's it. There was no more confirmations for longs. But what was interesting to me was actually this compression here was quite clean. I mean, this was, what time was it now? This was yesterday around 8 p.m. around 8 p.m. This sort of pattern here and this pattern here, right? So this piece of information was very bearish to me. Was that, Rod?
It's 8 p.m. UK time.
8 p.m. UK time, exactly. I was in the middle of, hold on, let me block this bot. I was in the middle of actually managing this Aussie trade, right? And to answer the question, I used the Dixie to give me some sort of bias for the other markets, right? So this particular setup here that I called, this was at sort of 6 p.m. and then it sort of rallied, right? I took some profit here, or most of the profit here, and the remaining was here. Now this was more of a, so it was more of a scope. It wasn't a high probability setup. But if you look at the Dixie, at what time was this? This was 6, and then we got the pullback on the lower time frame. There was some confirmation, break of structure, bit of a QM, and then a confirmation. And this was at around 6 to 7 on the Aussie. The entry happened at 6. So if we look at the Dixie at 6, what was happening at 6? It was this pattern here. Look, I was quite convinced that the dollar was going to drop because of everything that I just mentioned, which was the strong momentum, weak rejection with large wicks, then a very, very clear pattern. What do you think is likely going to be the next move? Right, if we go to the M5 for some clearer price action. In fact, let me tidy my chart up. Give me one sec. There we go. What do you think is going to be the next move? Right, compression, momentum. Very likely there's going to be a move to the downside. And this was at around 6 p.m. Right? We can even take it one step further. We go to the M1. We're going to see some further price action. Right, there was some points of interest here. Look, there was a break of structure, and then some price action here, especially on the second time frame. But most importantly, there was also this pattern here and this pattern here. Look, right, because it's on the M1, it doesn't have to be too perfect. It doesn't have to always go and complete the perfect boomerang. We're on the M1. You don't have to be perfect. This is enough for me. Clear Elliott waves as well. 1, 2, 3, 4, 5. Compression. I was very confident the next move was going to be bearish, and Aussie was quite clean to me at the time. I've deleted the 4 analysis, I believe, but this to me looked like it was about to rally. There was this pattern here. Right, so everything to me was indicating it's very likely going to reverse to the downside, to the upside, sorry. And I also missed this sort of pattern here, this QM, as you can see. So I had another opportunity to get involved, and I caught this move. Most of the profits were banked here anyway, and then I can't remember what happened after. I just showed my stop loss, and I got taken out somewhere here. So that's how I use correlation. I definitely look at the Dixie, and then I look at the Aussie or the Euro, etc. You can also look at dollar CAD, but then you'll have to look at oil, dollar, etc. But I don't look at oil. The reason I don't really look at oil when I'm trading dollar CAD is because they look identically similar. Right? You don't want to be doing too much correlation and looking at the futures, oil, S&P. It's going to get too much. You just need to really simplify it and just have a bias. That's all you need. So if you look at the dollar, if my bias at the moment is telling me that at this piece of information, it was going to go short. You don't have to go to the M1 and look for the perfect BOT, banker block, the trend line, the Elliott wave. You don't have to do that. Just look at the bias. Where do you think it's going to go next? Short. That's all I needed. And then I looked at the Aussie, and if I see a bullish setup, I'll take it. This is a quick in and out, 2.5R. Okay, let's look at the main analysis. See what I've got for today. I'm actually very bullish on the Aussie. I'm expecting potentially a move to the downside, grab some liquidity here, and then continuous move up, because we have rejected of this pattern here, as you can see. Right, so we've got 1, 2, 3, 4, and then 5. That's the game plan for Aussie. And this was also the setup that I posted within the BLT community after this compression, that the next move up was going to come up here, and we have that. So well done if anyone caught that. It was very clear price action. So at the moment, we're in the middle of no man's land. So only look for bullish setups. Forget the shorts, right? We're going to trade bearish setups. You have to honestly be in and out as quickly as possible. Forget aiming for high risk reward, just bank profits. If you see a clear bearish setup, such as if it comes up here and there's a bear setup, fine, I'll sell it, but very temporarily to at least this area. But only if I have a buffer to play with. If I don't have a buffer for the week, I'm not going to be selling it, because I should only be looking for buys in the middle of no man's land. So the game plan for Aussie is, yes, I'm very bullish on it. We may get a pullback today, but best believe it's very likely going to complete this pattern. So bullish on the Aussie. Same with the Euro. I believe the Euro is also just gradually climbing up as well. We have this little pattern here on the H4. So this has potential to climb up here and complete some price action here, potentially even a larger boomerang. So bullish on the Euro as well. You sort of just need a pullback first. And then we can, we just need to wait until there's a clear bullish setup. On the H4, we're just approaching this long-term trend line that we have here. And this major banker block that we can see here. Major banker block. It was the reason for all of these multiple structure breaks. So there is a lot of liquidity here. So that's a good target. And then we can reevaluate. Again, this could still break, but if there's confirmation, it's going to increase your probability. That's the Euro, dollar CAD. Dollar CAD, well, again, similar scenario. We zoom out actually on dollar. I am expecting price to come up to the top end of the channel. I'm not sure how long that will take. For now, I'm quite bullish on dollar CAD towards this area. So 1, 2, then potentially 3. And we have this current pattern. So bullish. However, we could do something like this. So 1, 2, and then extension, and then a drop to the downside, and a boomerang towards where? Previous liquidity, right? So it could, in fact, go short first before going long. But we wait for confirmation. That's the most important thing. Always wait for confirmation on when trading. Dollar yen. Oh, this is a bit of a mess. What's happening here? Okay, it's quite old. It is another entry that I took. I believe I got taken out here or something, and then I sort of made it back. I can't remember. No, but I'm not gonna get into this entry. So this must have been a loss, and then this must have been a win. Okay, but that's done. Similar concepts, but this is a banker block that was found on the lower time frame, right? It was the reason for this breaker structure, right? And because we've got this pattern, we know we can use this banker block. We're not going to be using this one or this one or this one or imbalances here. We're going to use this one because it's the one that's relevant with a pattern, right? That's the most important thing with the BLT. That has to be a pattern. Now, what's happening here? Oh wow, it actually it went to my take profit. Amazing. Okay, cool. That's just good to know. I'm not in it anymore. Cool. So let's tidy everything up. See what the game plan is for next time. There's a new pattern here. Kind of in the middle of no man's land. And we have this middle intersection. So we could, in fact, get a short-term rally today towards at least sort of this point of interest. Then we can see what happens from there. Okay, that's that. Really, really strong one at the moment. Okay, this is quite completed. It's unlikely for price to complete this unless we get some momentum. It's a possibility, but unlikely. At the moment, I'm still quite bearish on the dollar. So with dollar yen, we're still within this large bearish channel. So this would be a pretty decent entry if we wait for confirmation towards this point of interest. Plus, if you see, there's a break of structure, there's a banker block, massive momentum, and then we've got a very, very clear Elliott wave as well. We do have 1, 2, 3, 4, and 5. So that's looking pretty decent. Nice little short. In fact, I'm going to add it to my watch list. And then Aussie, just look for longs and you'll be good. Euro, look for longs, but it's not looking that clear. But the CAD, look for longs. It's not really, we still kind of have to wait. And that's about it, to be fair.
Very nice, very nice.
Say that Euro is bullish into the top of that range, and then we can expect to go down the range. Depends what range you're referring to, but I'm going to assume it's this one. At the moment, it's just not in a point of interest. I'm not going to be trading it, right? It's just not clear to me at the moment. I would like to see like a pattern first. At the moment, there's a bullish pattern, and it's just looking. It's not clear. That Euro, I'm going to step away from it. So unless we get a break up here, even if we get a break up here, why look for longs if there's this barrier here, right? Look at this trend line. There's a barrier there. There's no point looking for longs unless we're down here somewhere. Okay, that's it for me, Rod. I'm gonna have to probably refer the YouTube members to watch this video, so I don't have to repeat everything.
Okay, so you've covered everything for the BLT, yeah?
Yeah. That's it.
Okay, good stuff. Cool. So, yeah, a few potentials. Hopefully, that's been valuable for you guys. Any questions before we go, and we start wrapping things up in the next 5 minutes? Over to you guys. Sounds, yeah, all good.
Thanks for joining, guys. I love the commitment.
Yeah, it's been fun, guys. It's been good. I'll speak to Cam in regards to the upgrading it up to 1080p, because I can see from my end the quality isn't great. So yeah, let's apologies for the quality. We want the best quality for you guys, but we need to speak to Cam to get this thing upgraded. We're using StreamYard at the moment, which is a really, really good streaming software, but we need that upgrade to get 1080p streaming, and that obviously will improve the quality. But we do live stream on the CTI YouTube channel every Friday, 1080p, high definition, and we got the one and only master technician, Diego Torres, yours truly, who is going to, he on a Friday, so every Friday on the CTI YouTube channel, guys, Diego covers everything we've covered, but just a little bit more detail. All right, so make sure that you turn up, you subscribe to the CTI YouTube channel, so you'll be able to get the notifications when Diego goes live. Usually on Trading Nut, this live stream, we do it on a Tuesday, Wednesday, or Thursday. Let me quickly check when we are back next week. Next week, we are back on Thursday, 1 o'clock UK time. So that's the New York session, right? So next week on Thursday, the 15th of December, we're going to be back. It's going to be a good one because we're going to have some data. And there's going to be a lot of volatility that week. So price action is going to be juicy. I appreciate your time as well, those of you who've joined us. And it's been a pleasure, always an honor. See you guys next Thursday, 1 o'clock UK time. Thanks very much, everyone. Good luck with your trading today. And have a good weekend.
Amazing. Thank you, everyone. Thank you, Rod.